we have the management, Mr. Shenu Agarwal, the new Managing Director and CEO at Ashok Leyland, now with us. Sir, we understand that March sales were pretty good. There was an uptick due to pre-buying before the price hike. Is that the case? And can you talk to us about Q1 expectation in terms of volumes? How can the price hike impact the demand, if any?
See, it is true that there has been a bit of pre-buying in February and March, but we don't think that that would have a big impact on quarter 1 sales or quarter 1 industry. And, we have very strong tailwinds right now in the CV industry. And I mean, for us at least, I can say that our retail sales even has been higher than the wholesales, right? So we have been able to kind of create some cushion in the pipeline as well. So we are quite optimistic about quarter 1 as well. As far as the price rise is concerned, yes, there have been pressures because of the OBD2 norms and also because of some element of inflation that we are seeing is creeping in. And we are closely watching the situation. Some of our competitors have already indicated some price hikes. So we are just watching the situation on the ground, and most probably we will also take a price hike very soon.
All right, Mr. Agarwal, the company used to enjoy an EBITDA margin between around 12% pre-COVID levels. Now, since you are already on the recovery path, given the growth, in how many years do you feel you will be back on those levels?
Yeah, see, profitability is a big focus area. I think not just for us, but in the entire space, because the entire space, CV space, is suffering from a lower profitability in last few years. I think Ashok Leyland's peak profitability or EBITDA levels were close to 12% and probably not 14-15, and that is our first objective, to get back to those levels. I think FY23 has been a good year that way, because we have not only been able to grow our market share, at least in the MHCV segment, very significantly, but also we have been able to increase our profitability quite significantly. Now, profit, as I said, is going to be a continued focus, and we hope in the next year or couple of years, we will get to our peak EBITDA levels as well.
So as after your appointment, we have been speaking for the first time. Can you tell us the long-term focus areas that you have planned under the leadership?
Yeah, see, Ashok Leyland has been on a path of turnaround for the last couple of years. And I mean, the company's first focus is to continue with that momentum and continue to expand our reach, continue to increase our market share, especially in the northern and the eastern markets, where relatively or traditionally we are a little bit weaker. So we want to continue with that, and we want to continue to further leverage the new products that we have launched in 2 to 3 years, especially the Avatar range of products in the MHCV side and the Bada Dost on the LCV side. We think there is a lot of potential in those products yet, right? So both on the product side as well as on the geographical expansion side, we want to continue with that momentum. That is one. The other is we also want to continue to expand our product portfolio, because as you know, Ashok Leyland has some gaps or some white spaces in the product portfolio.
Right. Also, now if we see your competition is getting ready for hydrogen fuel cell technology, how do you see this technology growing and getting into the mainstream transportation, and by when? And you are already working on it, right? And have already collaborated with big names like Reliance and Adani?
Yeah, I think the roadmap on alternative fuels is getting more and more clearer. Although Ashok Leyland's strategy is to work on all the different possibilities as far as alternative fuels are concerned, because in terms of timing of the market and in terms of development of the ecosystem, there is still a lot to be seen. But I think what our plan is that we want to start with on the electric side with the buses, which we have already started doing through our arm, which is called Switch. We also want to bring in electrification in the LCV segment through Dost and Bada Dost electric vehicle launches later this year or early next year. And then we continue to focus, as far as hydrogen is concerned, we continue to focus on both the hydrogen ICE as well as in the fuel cell. Now that, although we have made some initiatives with Reliance, as you said, and also with Adani, but I think it will still take the country about 3 to 5 years to make this technology commercially viable, not just on the vehicle side, but also in the ecosystem side. So we are focused on all different technologies, electric, hydrogen, even other fuels such as methanol, ethanol, etc. And we want to be technologically ready. And as I said, our objective is to take a first mover advantage in these technologies. So we are very, very focused on these.
So investors have been waiting for this news to come for a long time. So can FY24 finally be the year where you see a partner getting into Switch Mobility? How do you see the growth potential in India and what are the expansion plans?
Yeah, as far as the funding is concerned, we are very positive that this should happen sooner than later. We have had some advanced level dialogues with a few entities. I mean, in hindsight, I think there has been a certain delay, but that delay is to our advantage because this bus electrification specifically is getting more and more pace now, and also the business model is getting more and more clearer, right? So whenever this is a good time to bring in investor from outside, and we hope we will give you some good news in few weeks or few months to come. As far as the business outlook is concerned, we are well positioned in the electric space as far as the buses is concerned. Most of the orders are from STUs, but we see more and more traction from the state governments to electrify their their transport systems. And Switch is very, very well positioned. As you can see, we have already started supplying to a lot of state governments, and there are a lot of orders that are in the pipeline as well.
Speaking of which, Mr. Agarwal, could you give us your EV sales target for FY24?
Yeah, EV sales is dependent on the STU orders right now, and we all know the numbers from the CESL phase 1 and phase 2, right? So our focus right now is to quickly complete those orders, working closely with the various state governments, right? So that is the focus, as well as develop some new products for both India and outside India markets. Also, as I said, we are very seriously working on the launch of electric Dost and Bada Dost models as well, because we want to get into that electric LCV space now. And those launches also, we are working around those, and we will hopefully launch them during later part of the year or early next year.
So you said that capex and investment book outlook remains at 750 crores, sorry, for FY24. Any changes to that number? What are the fundraising plans for Switch Mobility?
So roughly, you are right. Roughly, Ashok Leyland's capex amounts to roughly between 500 to 700 crores annually. This includes the money that we are going to invest in the alternative fuel technologies, including electric. And I mean, that is the correct number. Even in FY24, our capex outlay would be within that range of 500 to 700 crores. Now, as far as Switch is concerned, you know that we have been funding it ourselves so far, and we will continue to do that. We have enough cash reserves to be able to do that in Ashok Leyland until the time we get the outside investment. So Switch, as well as Ashok Leyland's product development and other capex plans are in place, and we don't see any problem with that going forward.
All right, Mr. Agarwal, thank you so much for joining in today.